basically, they are. This is the fixed asset module. So you see, as any other module, it starts with transactions. So as other modules, when you do a transaction within the fixed asset module, it will have an impact on the GL. And so all the transaction related disposal, acquisition, depreciation, everything will go via the fixed asset transactions. And then to be able to do a disposal or to do an acquisition, then you need fixed assets, which is the profile. And we'll come back to it later on. And after that, you have all the processing streams that will come back also, and then all the reporting. And finally, the preferences, which are the setups. So let's look at the fixed asset. Rickard. And I'm just opening my Acumatica. It won't be long. There we go. Okay. So then, as you mentioned, you, as any other module, you have asset class, which will contain multiple things to speed up the entry of new assets. And also it will define a couple of other things, such as the useful life in years, such as the depreciation method, and so on. So this is so one thing that you could do is create the fixed assets manually, but this is not the more efficient way. The more efficient way would be to convert purchases to asset using the processing stream. So what this screen will do, it will look up at a specific GL account and sub-account, and then you will be able to select the one that you want to transform into a fixed asset. So these are regular purchases using the AP module, and you can even go a step prior, just to start with a purchase order or even a requisition or a request. So you have the full tracking from where it starts. So you can start as soon as the request, changing that to a requisition, changing that to a purchase order. So at the end, then receive the thing, and after that, you could enter the AP bill, so you have a three-way match. And finally, once the bill is there, you can create the fixed asset profile using this screen here. So this screen will list everything, every purchase that has been done in that account. And if you're familiar with things such as PO accrual or landed cost accrual or other kind of account like this, this account typically is a clearing account, so it means it's a temporary account. So when you book your AP, you book against that GL account, which is a fixed asset to be created. And then at the end of the month or when you want, you just tag the ones that you want to transform into a real fixed asset. And the thing that you have to be aware of is that you need to define the asset class that this thing is part of, and as well as the department. So department is mandatory because depending on the department, the sub-account, if you're using sub-accounts, then the sub-account can change based on the department. For the depreciation and also the fixed asset value. So you can benefit from segregating or grouping the fixed asset value and the fixed asset depreciation using by department. Am I going too fast, or is it good, or so far so good?
Like normally the CAMS people on the call, they're normally not a quiet bunch, so I think they'll. You guys, if you got questions, go ahead and ask them. But I'd keep going.
Okay, cool. So then once this has been done, then the system will create a new fixed asset. Now you can change the account. So sometimes one of our customers was saying that people on the AP doesn't know, the AP clerk doesn't know if it's an asset or not. So the person was booking the expense as a regular expense. But if for example, for any reason that was done, then you can still come here and just select the expense account. And then you will be able to move that AP from this account to the fixed asset module. So basically, when you proceed with that will create a fixed asset transaction, which are a bit special. So once the fixed asset has been created, then if you use a convert feature, then you will have some other information such as the bill number, the receipt number, and so on and so forth. So you would have all kinds of information about where it's coming from. But to be able to see this fixed asset, a transaction has been made to increase the value of the fixed asset. So then there is a transaction, and you can see here there are multiple transaction types. So you have purchasing plus, which means that this is the acquisition of the fixed asset. So if I will select only purchasing plus, you would see that you have 3 of them. And why is that? Because you have many books into which you have the value of the fixed asset and depreciation. So the posting one is the one that typically is at least you have to have a posting one. So this is the minimum, at least one book. And this will impact the general ledger, the accounting value. But the other 2 books, the depreciation method can be slightly different. The periods can be slightly different because you may want to have other books for tax purpose, or any kind of other purpose. I just want you to know that if at one point you want to back up a bit, the posting will have the same exact periods as your general ledger. But should you want to change the periods into your general ledger, so let's say that you have you want to change your fiscal year or financial year. If you do that into the GL, just take note that you have to ask Acumatica to run a script in order to change the fiscal year, the financial year, also in your fixed asset module, because you want it's handled at the GL, the change, but it's not handled at the fixed asset module. So Acumatica will provide a script to change a period, because what you can see is a table like this. So this is for the book posting, where you see all the calculated depreciation to make some projection, but you also have the amount that was, in this case, booked into the general ledger. And so to create these entries, you have another processing stream that should be part of your month end, which is the calculate depreciation. And at the top of it, you have depreciation that will create all the GL entry for the posting book, and for the others, we'll just calculate the amount on the table that I just showed you at the fixed asset level, and that table will also provide numbers for the different reports that you have into the system. Of course, this is a processing screen, you can put that into a schedule so it will run automatically, but I recommend actually that the first couple of months you do them by coming into this screen, just to make sure that it makes sense before automating that. Coming back to the fixed asset module, if I go back to my fixed asset, I'll just take the same one. There you go. So coming back here, you also see tag numbers that you can have, serial numbers, all kinds of things. You see the acquisition cost. And then on the balance, you see here the depreciation, at which date you started, what is the last depreciation period, what is the acquisition cost, the current cost, accumulated depreciation, and net value. So that can change based on the depreciation method, and you can create your own method should you want to be inventive or use the ones that are into the system. And so, as any other places in Acumatica, you just associate or map the depreciation method with a fixed asset class, and then the system will put that method automatically when you create the fixed asset. GL accounts, same thing here. So you have the fixed asset account for the value. You have the fixed asset accrual account, which is the special account that the AP will be booked into. Accumulated depreciation account, and then the depreciation expense account. And so these are gain account on disposal, loss account on disposal, and proceed account. So proceed account is similar to the FA accrual, but it's the when you're selling, when you're disposing an asset. So if, for example, I have this asset that has a value of $8,000, $8,300, and I want to sell it, I want to dispose it by selling it to $10,000. So my 10,000 will go into my proceed account. So when I'm doing the AR invoice, I can put that into the 10,000 will go into my proceed. So the proceed will go back to zero because my gain on disposal will already been done by the fixed asset module. Am I going too fast? Maybe not. You are strong. Keeping up with me.
But Eric, hey, this is Jeff Scott. I've got a question though. But you're not always going to have proceeds, right? If you own a disposal, correct? I mean, if you may retire or something, or
well, if the value that the remaining if you scrap the thing, then the proceed account will be at zero. So then you will just have a loss on disposal at that time. Yeah. And the proceed account can change depending on the type of the disposal method that you are using. So if I go there, you can have different disposal method with different proceed account. So then, so you see for stolen, sold, stolen, lost, damaged, donated. So we, in that demo system, they didn't put any proceed account, but typically for the sold one, I put one because I want my AR to know what I need to invoice. So if I see that there is an amount in the proceed account, it means that there is something I need to invoice to my customer, a fixed asset that was disposed, and I need to take care of it, just as a mean to see if I missed an invoice or not. I was telling you earlier that you can convert a purchase into an asset, but you can also create a fixed asset from here. But when I'm doing that, then of course the system will create an entry, a purchasing entry, um, and to be able to balance with my GL, because if I create a fixed asset from scratch here, there is a good chance that this purchase was acquired and I paid money for it somehow. So then this is why you have this reconciliation tab where I can select at the bottom the purchase that was made. So I can tell that I can transfer the money from the purchase that is selected here with the fixed asset value, so that at the end of the day, I don't double account for that fixed asset. I don't put it in as an expense at one place and at the same time record a new value, a new asset. So this is why we have this mechanism here where I can select something. I will just put a number just for you to see. And you will see that I have a good imagination. A new fixed asset called asset. This is pretty good. And I will put 1,000, 10,000, whatever. And then I can select an account here, the same fashion I was doing earlier. I can select something else. Anyhow, I don't see anything, so that's not a good sign, but anyhow, we should see all transactions here. This is required, as I said. So I'll just change my date. I'll change my account. Okay, I'm not too successful, but trust me, if you would have some information in that account, some transactions that these transactions would be listed here. So by processing that would automatically transfer the amount from this account to the fixed asset module. And then if I'm looking at the one that I was looking at earlier, and so see there are some numbers here. So I could, and if the acquisition cost doesn't balance with what I put in what I selected, then it will be, it will have a unreconciled number here. So meaning that I didn't select, I just increased my asset of 100,000, but I didn't select something from the system that exists in the system. And so here you have purchasing plus that I described, depreciation that is something at each month you calculate the depreciation, and the system will do a GL entry, accumulated depreciation against expense depreciation. And then you also have other things such as split. So you can split an asset. Let's say that you have a computer. You can split it between memory and hard drive and things of that nature. So it can create new assets by splitting one asset in multiples. You can have also a parent asset with some children. So let's say that you do, I don't know, you have a parking lot that you put fence after a couple of years, and after that you put something else. So it's all the fence is related to the parking lot, but they have their own fixed asset depreciation schedule. So then you can not increase the value of the parking lot, because otherwise it will be the calculation won't be right. So then you create a new asset and you link both together with the parent asset. So if this would be the fence, then you would select the parking lot as the parent asset. So you can have a report that group them together, but still have their own schedules. And you can have components also. So this is, if I look at this asset, you will see that this asset is the 7 is the parent. So you can see for the parent asset, all the children. You can transfer asset from one department to another as well. So we look into that. And the last piece is how you upload your fixed assets. So the thing with the upload is that it works the same fashion, really, as the same mechanism as any other uploads in Acumatica. You fill out an Excel spreadsheet, and the minimum required fields are the fixed asset ID, the name, the department, and the fixed asset class. So if the fixed asset class contains everything that you need, then you're good to go. In terms of you also need their original acquisition cost. That is very important. And one tip that I can provide from my experience is the fixed asset doesn't allow too much mistakes. So I suggest that you upload them into a demo system or a tenant demo just to make sure, because by uploading them, it will create transactions into the module, and then these transactions cannot be removed. So it's kind of it's difficult. So and one thing that you have to pay attention to is the depreciation from date and period, and also the last depreciation period, so that the system will know. So this should be your cutoff date. So the date at which or the period at which you have the balance. And the system, what it will do, if there is a difference between what you upload, the value that you upload, because in migration mode, there is a migration mode in the fixed asset module. So in migration mode, you are able to put the last depreciation period as well as the accumulated depreciation, these two fields. Otherwise, you cannot edit them. So I cannot edit them because I'm not in migration mode. But when you upload these value, this value, if this value is not the same one as Acumatica would have calculated based on the date that you put, based on the depreciation method, based on the value that you put, then you would see on the here, instead of 5,000, let's say that the system calculates 5,000, 5,000, 5,000, and here you upload the value, and there is a difference between what you have calculated as accumulated depreciation in the system. You would see that this number won't be 5,000. It would be, for example, it can even be minus something. So the system will do like an adjustment that you cannot change, to set the value of your depreciation of the first period that you will depreciate. There will be an adjustment so that Acumatica can be consistent with the parameters that you put into the system. So if your own amount calculated is not the same as what Acumatica would have calculated based on the parameters that you put for that asset, then it will do an adjustment to fix it. So this is something sometimes a bit annoying, but it's the way it works. So we've got some customers that put all these adjustments like a counterpart into their financial statements in a separate GL account so that they can explain it. but it's something that you cannot override. Do you have questions?
Yeah.
Everything for that branch, but I can do something else should I want to. So it's really company by company or branch by branch. Yeah.
Okay. Can you show us what just kind of if a fixed asset ledger that I would hand off to my auditors or something, what that would look like under the reports? Like, here's all my assets, here's the acquisition date, gross cost, accumulated depreciation, etc.
Yeah. Mm-hmm. So this is one example of a report where you have the end net value that should match with what you have into the general ledger.
Uh-huh.
Of course, you could add here the date of acquisition and things like that, but it's really based. I'm asking just for 1 year, but you can have the what happened in 2022, for example.
Uh-huh.
What else? We've got this one. So this is a joint inquiry. So you have the original acquisition cost, the date when you put it in service. So that would be something else.
And then that generic inquiry could be added to or subtracted from by you. And then, as true of all generic inquiries, you've got the ability to output to Excel, right? And then you could just, output it to Excel and hand it over to the auditor, as an example, right?
Mm-hmm. Yeah. Yep.
Hey, Eric, had a quick question.
Mm-hmm.
Can you hear that have been paid as a fixed asset?
Yes. So what? So I was just mentioning the purchasing module, but it's not mandatory. In reality, you can use it, but at the end of the day, it's the bill and adjustments that would be transformed into a fixed asset. But to answer your question, yes, you can. In that case, that would be a great situation where you could create a fixed asset here, and then when you go at the reconciliation tab, you would select like 3 bills. So the made up of these 3 amounts would match with the acquisition cost, and then you will be good to go.